Good morning, ladies and gentlemen. Welcome back again in Radio Indika 91.6 FM Jakarta. With me, Dani. Today, Financial Freedom Program will be talking about one of the ways to achieve financial freedom, stock investment. Now in studio, I have friends, Mr. Andre Gunawan.
Hello, Danny.
And Mr. Johannes Perlindungan.
Hello, Danny.
Who the expert of financial from Jakarta Stock Exchange. Besides these two great guys, we have another expert, Jusdi Mubarak and Andre Octav Fauzan Lubis. We will contact them soon later. In November 2015, government through Indonesia Stock Exchange and OJK has launched a program called Ayo Menabung Saham. The purpose of this program is to develop the capital market industry in Indonesia that focus not only on increasing the number of new investors, but also seek to instill the need to invest in the capital market, which will indirectly increase the number of active investors in the Indonesian capital market. So how can we take optimum benefit from this program? It is all about to find a good stock. Why? Forget a big in a short time, but of course it's not easy to find this good stock. How can we choose good stock from so many stocks in the market? This is a classic question for all stock investors, especially for new investors. So, to help you all who are interested in investing in stock, today we will discuss one of the important books in the history of stock investing. This book written by one of the most successful stock investors of all time, Peter Lynch. This book titled One Up on Wall Street. In this program, we will discuss this wonderful book with some financial experts who follow this principle of stock investing offered by this book. Okay, Andre, would you tell us about the basic fact of this book?
Okay, Danny and Indica listener, this book contains 20 chapters that are divided into three major parts. Part 1 is about preparing to invest in the stock market. Part 2 about how to pick the best stocks. And Part 3 about long-term view as fundamental orientation of stock investment.
Andre, would you tell us who is Peter Lynch?
Okay, Danny and Indica listener, Peter Lynch is nothing short of legendary in the world of investing. His name is counted along with the legends like Benjamin Graham and Warren Buffett. Having landed the role as an intern with Fidelity Investment, largely because he carried for the president, Lynch worked his way up through the company, proving to be extremely talented at identifying great stocks. Returning from 2 years in the army, he became Fidelity's head of research, and at the age of 33, was given the control of the Magellan Fund, a small mutual fund with assets of 18 million US dollars. Over 23 years, Lynch grew the fund to 14 billion US dollars, which was more than combined GDP of many countries put together, making it the best performing mutual fund in the world, averaging an almost 30% annual return and beat the S&P 500 index in 11 out of 13 years. Lynch has written 3 books in investing, outlining a simple philosophy that made him one of the world's most famous investors. The books are One Up on Wall Street, Beating the Street, and Learn to Earn. Cut.
So, Joe, what is the basic premise that offered by this book?
Okay, Danny and Indica listener. In this book said that amateur investor can match or even do better than the professional at stock picking. This is a controversial idea, just like what Benjamin Graham and Phil Fisher and Warren Buffett believe. Peter says that even the professional make money in stocks when they step out of the red race and think amateurish. Therefore, if you are an amateur, you should capitalize on your advantage and stop listening to the professionals. One Up on Wall Street focuses on the idea that observation in your day-to-day life can help you identify individual stocks that you can make a killing on. What industry do you know well? What company seems to be surging in that area based on your observation? Right there, you have the beginning of some great investing choices. Let's dig in, see how let's describe this all playing out. One Up on Wall Street focuses on the idea that observation in your day-to-day life can help you identify an individual stock that you can make a killing on. What industry do you know well? What companies seem to be searching in that area based on your observation? Right there, you have the beginning of some great investing choices. Let's dig in and see how Lynch described this all playing out. In the introduction section then, and indica listener, the book opens with an impassioned argument from Lynch on behalf of seeking out 10 beggars.
10 beggars?
Yes, 10 beggars, which refer to stock that increase in value 10 times from their initial investment. Buy a stock at 10, when it goes to 100, you have a 10 beggar. Lynch makes that astute point that if you buy 6 stocks, 5 of them go to 0, and 1 is a 10 beggar, your rate of return is still 66%, an utter killing. Clearly, Lynch's argument from the individual stock investing is that you can occasionally hit a grand slam and make up big time for a few strikeouts. That's it.
Cut. Sure, this makes all of us anxious to go to the next chapter, right? Okay, for the first part of this book, Preferring to Invest, Andri, can you tell us about this chapter?
Okay, Danny and Indica FM listener, I have taken a note in my laptop here of some important point to the first part of the book called Preparing to Invest, and I will try to share it with you. So in this section, Peter explained about psychological aspect of investing in stock markets. Peter came from a modest family background and worked from a young age in a golf course as a caddy.
As a caddy?
Yeah, carrying golf clubs for Wall Street players, where he learned stock investing from overhearing the stock and investment talks. He started investing on his own, funded his own education from Wharton Business School, and later on joined the mutual fund industry. He demonstrated a very good understanding of the way a common investor thinks and acts, and therefore provide very helpful guidance for dealing with emotional ups and downs of stock market investing. So most of this section focuses on one key point. Ignore the analysts and experts. Instead of tuning into content for the hot picks, do your own research and find the stocks that you understand and believe in. Also, don't try to time the market or predict the economy. Very few people can do that well. If Roy Samble cannot do it all the time, how can you?
From Roy Samble?
Yeah. The economy is incredibly complex. Don't get egotistical and believe that you know how it works. Instead, focus on what you know. Look at the companies and industries that you are familiar with. Listen to what people you know are talking about and follow that to your investment. Just listen to what people say, do your own investigating, and follow up on what you find. Cut.
Go.
Most important of all, Lynch offered 3 questions that you need to seriously answer before you start investing in stocks. The first question is, do you own a house? If you don't, buy a house first. It provides you a stable and permanent place to hang your hat. Some might argue with this advice, but the permanence and investment qualities of a home, the advice does make a lot of sense. That doesn't mean fully owning a house, but just to be in one and have a stable, non-adjustable mortgage that is building equity.
Go.
The second question is, do you need a money? Don't invest with money that leaving you feeling sick if you lose it. So use extra money. Use money that won't devastate you with each loss. You need to be able to stomach big losses with the money without breaking a sweat. if you're going to swing for the fences. The last question is, do I have the personal qualities it takes to succeed? Peter Lynch is patient, open-mindedness, self-reliance, common sense, a tolerance for pain, detachment, persistence, humility, flexibility, a willingness to do independent research, an equal willingness to admit mistakes, and the ability to ignore general panic. Notice that among these traits, a high level of intelligence is not found. So you don't have to be a genius to succeed in investing in stock.
You don't have to be
A
a genius.
Yeah. That's all, folks, my brief understanding about the first part of the book. Hope this will help you guys all preparing to invest in the stock market. Cut.
Thank you, Andre. It's truly inspiring for us. Thank you for sharing.
You're welcome.
Okay, Indica listener, our next part of the book is Picking Winners. Will be discussed by another expert from Bahana Securities, Mr. Andre Octavian Lewis. So let's call Mr. Andre. Hello, good morning, Mr. Andre.
Hello, Dan. Morning.
How are you today?
Oh, I'm very well. Thank you, Dan.
Andre, as we speak last week, you are now live in our program called Financial Freedom. And this week, our topic is about wonderful investment guide from Peter Lynch called One Up on Wallstreet.
Oh, okay, I see. It's a great book, Dan, and I have read it a couple of times.
Okay, wonderful, Andre. Especially, I would like you to share to all of our listeners about the second part of the book that discuss about picking winner stock. Can you briefly share it with us?
Oh, sure.
Okay, please, Andre.
Okay, Danny. In the second part of the book, Peter Lynch shared to us how to picking winner stock in the market. There are several important terms Lynch introduced regarding to picking the winner's stock. The first is 10 baggers. 10 baggers is stocks that increases 10 times in value. He believed that just buying one of these stocks could greatly increase our wealth over a lifetime. Second term is the 6 categories. Lynch sets out 6 categories that all stocks fall into. Understanding what categories a stock belongs is important for assessing what you should look for and what return you should expect. The categories are consist of first, slow growers, second is stalwarts, third, fast growers, the fourth category is cyclical, the fifth is turnarounds, and the last category is asset plays. Lynch guides the investor to choose good stocks by clearly explaining the features of good companies in each of these categories. Reading this section also helps an investor to find out her or his favorite area of investment in stocks market. The book contains Peter's checklist of parameters for selecting stocks in each of 6 categories of stocks. This checklist can be a guide for the investor to prepare her or his own selection criteria or can be used as a ready-made checklist for stock selection. Okay, Danny, in the last thing is even you found a stock that looks really good according to the numbers, don't invest just because of the numbers. Make sure that you can describe why this business is a good business and why you're buying the stock. And the fact that the stock is going up is not a good reason. There are several tips in this book, and my favorite tip from Lynch is when you hear people announcing that your sector of interest is hot or that the specific stock you own is hot, that is exact time to start thinking seriously about selling the stock. Lynch all but says to do the exact opposite of what the analysts are saying. The hot stocks are a bad idea, but the boring stocks are a good idea. I think that's all I can share, Dani.
Thank you, Andri. Thank for your time and sharing. Hope to see you soon in the next topic.
You're welcome, Danny, no problem. Bye.
Okay, Indica listener, our next part of the book, the long-term view, will be discussed by another expert from MNC Securities, Mr. Yusdi Mubarak. So, let's call Mr. Yusdi. Hello, good morning, Mr. Yusdi. I'm Dani from Indica FM. How are you?
Hello, Danny. Good morning. I'm very well, thank you.
Yusdi, as we speak last week, you are now live on my radio program called Financial Freedom. And this week, our topic is about wonderful investment guide from Peter Lynch called One Up Wall Street.
Oh, okay, I see. It's a wonderful book, and I have read it so many times myself.
Okay, Yusdi, especially I would like you to share to all of our listeners about the third part of the book that discuss about long-term view in stock investment. Can you briefly share it with us?
Okay, Danny, see. Link Link argue that you have to invest for the long term in order to realize outside returns. Following the daily movement of a stock price, it's timely wasting and nothing but a distractions. What should you be focused on? It's the company earnings. As over the long term, the stock price follow its earns. If you are not prepared to accept losses and hold into the stock in hard time, you'll never succeed as an investor. People who succeed in the stock market also accept periodic losses, setback, and unexpected occurrence. Calamitous drop do not scare them out of the games. The typical big winner in the Lynch portfolio, I continue to pick my share of losers too, generally takes 3 to 10 years or more to play out. So, now you have the tool to identify a stock. What's next? The final session discuss assembling a portfolio, knowing when to sell and when to buy, and that conventional wisdom here, once again, is often bogus. Peter advised a small investor to keep 3 to 10 stocks in their portfolio. However, ideally, she should buy as many exciting opportunities as she can find. Peter guided the investor to look for a good opportunities during the year-end tax sellings by institutional investor. He also stresses great timing for investor to become buyer, which is during market collapse, corrections, or free fall. These are precisely the time when investor can pick potential multi-bagger. Peter has decided a separate section on the when to sell in the book. Peter believed that the selling decision should never be influenced by the stock price as a company. Instead, it should be based on the change in the fundamental of the company. Therefore, in this section, Peter has explained selling sign for the company in each of the 6 categories stock: fast grower, turnaround, and extra. Thus, as an example, Peter advised to sell slow grower if it has lost market share for the 2 consecutive years, has not developed any new products, is increasing advertising spending, or looking for the acquisition to gain market share. The book contains similar criteria for other categories of stock to judge when the investment opportunity has run its course and identifying that it is the right time to sell.
Thank you, Yusdi. Thank you for your time and sharing. Hope you to see you soon in the next topic. Have a nice day.
You're welcome, Danny. Bye bye.
So let's sum up what we all already learned together. Peter Lynch has made a strong case for fundamental stock investing in one up on the Wall Street. Most of his arguments are in line with other great investors like Benjamin Graham and Warren Buffett. Like advising an investor never to overpay for the stock. However, exciting the opportunity may sound. If an investor overpay for a stock, then even if everything goes well with their stock as per her or his expectations, she may not make money in that stock. This is perhaps the most true and enjoyable book to read on individual stock investing. In this true grounding is what to look for when picking an individual company to invest in, and what does investment number actually mean. Best of all, it's all wrapped up in Link's writing style, which is quite good and very absorbing. One Up on the Wall Street is perfect guide for an inspiring investor who wishes to learn stock investing from a proven genius. It is a complete package that tells an investor about how she should approach the market, what to buy, when to buy, how much to buy, and finally when to sell. It is great that Peter Lynch decided to write his investing philosophy as a book, and millions of investors around the world could benefit from this experience. This book is one of the best that every person interested in the stock market investing will benefit from reading this book. This book becomes handy whenever an investor is confused about buying or selling stock. We can always reread the section dedicated to buy or selling of stock. And Peter's writings will help us see clearly through the situation and take a better investment decision. Some of the specific examples in this book are a bit dead, but with just a bit of focusing online tools like Yahoo Finance or clever Google searching, we can basically recreate the example using current stock. Better yet, when we do that, we find out that the strategies still work like a charm. If you have any interest in individual stock investing at all, read this book. It's well worth it, and it's earned a confident place on many people permanent bookshelf. Well, that's all for our program for today. Hope this will encourage you to read the whole book yourself and successful the journey to the financial freedom through stock investing. See you again next week in Financial Freedom program from Indica FM. Dan here, sign out.